afternoon. Welcome. Thank you everyone for being here today. My name is Lindsay Lehr. I lead the payments practice at America's Market Intelligence, and we're so pleased to bring you this webinar today, Cash, Digital Payments, and Crypto in Latin America, looking at 2022 and getting teed up for 2023. Thank you for being here. We have a really exciting set of content for you today. So as we get prepared to launch into our presentation, quick legal notice. You probably have all seen this many times. Please keep in mind that this report is intended to be used in conjunction with other information to make sound business decisions. Okay, great. So again, Lindsay Lehr, many of you know me as the director of the payments practice at America's Market Intelligence. I will be leading and moderating the webinar today, and I'm very pleased to welcome my colleague Ignacio Carballo to help us dive specifically into the crypto content we'll be looking at today.
Thank you so much, Lindsay, and welcome everyone. For those who don't know me, my name is Ignacio Carballo, and I am the head of crypto and alternative finance, a sub-area that we established almost a year ago to address the many questions and concerns that our clients and community had about this fascinating topic. I'm delighted to hear and looking forward to our discussion of today.
Terrific, Nacho. Thank you, and thank you. So before we dive into our content, I want to take a couple of moments to make a very special announcement. Many of you may be curious about this funny PCMI logo you see down at the bottom. When we were sending out the marketing material for this webinar, PCMI was there instead of the AMI brand. And if we go forward, I'm going to explain a little bit what this is all about. Those of you who are familiar with AMI know that we have worked specialized in Latin America since the early 90s. Okay, so we've already been around doing this for 3 decades, always with a razor sharp focus on Latin America. Over the years, we've moved from Mexico to Miami, opened up offices in Brazil, Argentina, Colombia, and have expanded our reach to really cover the entire continent of Latin America, including the Caribbean. The payments practice of AMI has exploded, growing 3x since 2019. And increasingly, behind the scenes, we've been doing work in other world regions for clients on an ad hoc basis as they request it. And this has started to occur frequently enough that we felt it was finally time to officially launch a global brand, Payments and Commerce Market Intelligence, officially born this year in 2022. If we go to the next slide, a little bit more of our thinking behind this is, of course, digital payments never remain confined to one region. And this is increasingly true with blockchain, with cross-border e-commerce, with international money movement. And so we've increasingly been receiving requests from clients to support them outside of Latin America. And so we're thrilled to be officially announcing the launch of PCMI, representing the payments practice of AMI at the global level. And so with that, on the next slide, we have a short and very special video presentation to tell you a little bit more about this that we'd love to share with you today. PCMI is the global evolution of AMI, Latin America's top market intelligence firm. I started at AMI back in 2012, and since then our team has become the strongest and most sophisticated market intelligence team for Latin America in the payments industry. But in the past recent years, with the evolution of digital payments eroding international borders, it doesn't make sense for us to focus only on Latin America anymore. So we've been building up our capabilities across APAC, EMEA, and North America, and we're ready to launch. We have to go where our clients go. PCMI takes the best of AMI, industry expertise, local expertise, and love of what we do, and takes it to the global stage. At PCMI, we work with the most exciting companies in the world, across payments, finance, and technology. We literally work with the biggest and the best. And so we have to be the biggest and the best. Biggest meaning biggest in mission and ambition. This year, we redefined our mission statement to read, to be more committed to our client success than any other consultancy on earth. We strive to become so valuable to our clients that we're considered an essential part of their operation. How do we do this? By committing not only to the company we're working with, but to the individuals, and connecting to the why of the project so that we're fully aligned and can deliver exactly the result the client is looking for. How are we managing a global team? The same way we've always managed our work in Latin America, by finding brilliant people who know the industry, know their market, and most importantly, are passionate about doing great work. You can't be a leader or generate value without the organic drive to build, expand, and serve. At PCMI, we live for the moments in which our talents and gifts align with opportunities to help our clients. And so we've gone out and found individuals who match this description across Africa, Asia, Europe, and the US, and built teams around them to cover over 50 global markets. Why payments? I love payments because it helps unlock the human desire to prosper, because it's essentially commerce, and commerce is creation. It reflects our desire to grow, build, expand, excel. So it's thrilling to be able to study and analyze this industry at the global level. We invite you to be a part of this. Come and get to know us at PCMI and experience the best, brightest, and most passionate consultants out there. We work with both large multinationals as well as startups to help them identify trends, risks, plan a market entry, acquire a new company, adjust their pricing strategy, understand regulatory risk, among dozens of other strategic questions. We'd love to hear about the new frontiers you're facing and how we can help you conquer them. So to give you just a couple more details, in that video, we mentioned that we are officially covering more than 50 global markets. We have gone out and created anchor teams in the locations you see here on the screen across Asia, Europe, and Africa. And from there are covering, 80% countries that represent 80% of the world's GDP. So you'll be getting introduced to these faces over the course of the next year, and we'll be coming out with content covering these regions. And today's content is going to be still focused on Latin America, because that's who our primary audience is. That's who you guys are. That's what you care about hearing about. And so look forward to more news covering other regions in the year to come. And just a final note on the PCMI team. We are the same familiar faces that you know and are familiar with. Lindsay Lehr, Managing Director of this new entity, also backed by John Price, founding partner, who many of you know, Nacho on our team, as well as many other faces that you have come to become familiar with over the past couple of years, will still be the core of PCMI, and you'll be meeting more faces throughout next year. Okay, so with that, thank you everyone for your attention. With that, we're going to move straight into today's content. Some of you have already had access to our white paper, From Invisible to Visible: Cash, Digital Payments, and Crypto in Latin America 2022. This is a detailed white paper that we came out with about a month ago, officially at Money 2020. And we're excited now to share with our wider audience the findings of this study. At the end of the presentation, we'll be sharing the link and a QR code so you can access that white paper and get immediate access to all the detail that we'll be covering just the highlights of today in this webinar. And just a reminder, as Nacho and I are going through the content, please remember that you can ask questions. There at the bottom of your toolbar, you'll see a Q&A icon. We'll have a time for Q&A at the end. So please don't be shy. We want to hear from you. Comments and questions are both welcome. Okay. So I'm going to get started with a provocative statement. Many of you may have heard me say this throughout 2022, but what we've been observing this year in Latin America is that cash is no longer king. This is a bit of a surprising headline because, I've been doing work in Latin America for 10 years now, and the resounding theme of Latin America is that it's underbanked, cash is king. And cash certainly is still has a primary role in payments in the region, especially in certain markets. But when we look at the top 6 countries, this report is covering this top 6 economies, we've seen that cash really has lost its primary role as the top payment method when thinking about retail. consumer face-to-face purchases as well as e-commerce. We're going to get to the official data in a moment, but a couple of top trends that have helped this to occur. First of all, simplified banking has made financial services available for the masses. We've been talking about this since 2020 when we really started financial inclusion to start to accelerate. And today, almost at the end of 2022, the region is transformed from 3 years ago. And so we can no longer really talk about the unbanked population. We can certainly still talk about the underbanked or the underserved. But by far in the top 6 countries, mobile financial services are available to almost everyone. That has created a foundation to enable digital payments of all kinds, and not only credit and debit cards, which has been the primary way of accessing digital payments in the past years. Now we have a lot more options, and we're going to be looking at that in a moment. Okay. Number 2 is the fact that e-commerce is at the end of this year is reaching 16% of retail. Why is this important? Because cash has a competitive disadvantage in e-commerce. In physical retail, it can be difficult to compete with the ease and convenience of cash. Cash is accepted everywhere and almost everyone has it. However, in the online world, while we can still pay with cash, it certainly has a disadvantage in terms of user experience, speed, and convenience. And so the greater share e-commerce represents of the overall payments pie, the less cash is going to have a relevant place in the overall payment method mix. So today we have 16% of retail. Now, the most advanced markets in the world, China, this number is up around 30%. So there's still a long way e-commerce can grow, but this has this has gained 10 percentage points from 6% since before the pandemic. Okay. Contactless. When we're thinking about credit and debit cards, contactless technology has really helped accelerate the use of cards at in-person POS terminals. In markets like Costa Rica, Guatemala, Chile, contactless payments are far exceed 50% of card transactions, and it really makes payments feel like magic, feel like as easy as a cash transaction, as instantaneous, as convenient, as seamless. And so this technology has really helped accelerate the use of digital payments in countries, particularly where cash has had a very, very deep penetration, for example, Guatemala and Peru. And then the final trend, and possibly the most transformational, is that money transfers, and by money transfers, we're referring both to instant bank transfers, such as PIX, as well as P2P, as well as instant transfers in a P2P app. Money transfers have become the new cash. I take this from Fabio on our team, Brazilian consultant, who very wisely said, in Brazil, PIX is the new cash. And that's a little bit what we mean by the title of this webinar, bringing the invisible to the visible. For the first time, instant money transfers are starting to capture so many transactions that would previously in cash that were 100% under the radar. And PIX, for example, and other platforms are so seamless and so easy that it doesn't feel to the user like a monitored or transaction that will be taxed, that will be monitored by the government. It's quick and easy, and in the perception of many, still kind of flying under the radar, just as cash does. So money transfers have not only have transformed the user experience, and also a little bit of the perception around digital payments. So these 4 trends are kind of what we track in our white paper. And just to move forward, we have some data that is quite transformational, quite important to understand these trends. So if we go ahead, this data here, again, the white paper goes into a detailed account of every of the top 6 markets, so you can really understand what this looks like at a country level. But when we look at the region overall, we have a breakdown here by payment method of e-commerce as well as face-to-face retail. And what is most interesting when we look at face-to-face retail is that cash has fallen to 45%. This is down from literally 70 to 80% 3 years ago. And so that is a tremendous change. For those of you who live in the region and who have seen this happen, you know how important and really remarkable this change has been. Now, this is skewed by how powerful and large Brazil has been. So this 45% isn't true in every market, but when we look at the region as a whole, this is really a huge transformation. Again, e-commerce, we see credit cards still being the #1 payment method. Bank transfers, once again, really pushed by the success of Pix, have achieved almost 20% when 2 years ago it was at 2%. Really seeing the fastest shift in the mix of payment methods we've ever seen. When we combine, so those of you who follow AMI, you're used to seeing this payment method breakdown within e-commerce, okay? But for the first time, we've combined e-commerce and face-to-face retail in one pie. Really thinking about digital payments as a whole. It's starting, someone said in our coffee chat earlier this week, our guest speaker said that e-commerce is vintage hablar de e-commerce. It's vintage to talk about e-commerce. We have to talk about digital payments because the line between virtual and physical is really blurring. And it's sometimes hard to tell if a transaction is e-commerce, even if it was done in the physical realm. So what we've done is we've mixed these two together to consider all of retail payments, right? When we're purchasing online or at a store. And when we look at that pie, we see cash even falling from 45% in face-to-face retail. Of course, when we add in e-commerce, it falls even more to 37%. Cards representing 44%, and other digital, this being bank transfers, this being QR codes, this being wallet payments, this being P2P payments used in a store, is already capturing 20% of the market. So this is the biggest competitive shift that we've seen take place over the last 10 years and is setting the stage for an even more dynamic and more competitive landscape going forward. So just to look at this at a country level, I mentioned that Brazil, of course, because of its size and how much it's changed in the last 2 years, really kind of impacts the regional numbers. When we look at Brazil and Chile, we can see how far cash has fallen. Chile being a highly carded market, debit card penetration almost at 100%. Brazil has always been the leader, a top leader in digital payments, with cash being less representative than countries like Mexico. But even so, with the launch of Pix, cash has declined even farther. We still see a lot of room for growth of digital payments in Mexico, for example, which, according to this analysis, still has the highest penetration of cash payments. Peru and Colombia, as well as Argentina, there's still tremendous opportunity to capture this volume that is still taking place and being chipped away at slowly over time. But we expect in 2023 these numbers to decline even more. And also in our coffee chat on Monday, it was mentioned that Mexico is teeing up to have its most transformational year yet with the rate of growth of e-commerce and access to digital payments. So we're excited to see what these numbers will look like a year from now. Okay, if we go ahead. So that's kind of a little bit of context and what we mean by making the invisible visible. With this cash displacement and this cash transformation to digital, now retailers, banks, payment processors, card networks, and even governments can better understand consumer behavior, where money is being spent, where money is going, consumer behavior around digital payments. And with the growth of open banking, we're not talking about open banking today, but that being a key trend in the region, more data being available. This is even going to make the market even more dynamic, make money move even faster, make people have even better and more quality access to financial services. And the famous informal economy in Latin America will continue to become more visible and more included, more legitimate. and more an essential part of what we talk about when we think about the economy in Latin America. And of course, crypto is a huge part of that. And so we're going to spend the rest of the time today talking a little bit about this crypto evolution in a very particular moment right now, not just going to go into detail about the moment that we're living, particularly right now in crypto. But before we do that, we're going to look a little bit at crypto adoption and who, crypto users in Latin America. So if we go ahead, crypto adoption, what does adoption look like? This is probably one of the most frequent questions we've received in the past year. What % of Latin Americans are using cryptocurrency? We know informally from different global reports and anecdotes that Latin America, specifically Argentina, Brazil, are among the top markets in the world for crypto adoption. And so over the past year, we've set out to try to put a number on this. How many Latin Americans are really using crypto? So we've done several surveys over the past few years, and we've gotten an extremely wide range of results. September 2021, it looked like around 6% of Latin Americans were using crypto, which was already an impressive number back at that time. When we repeated this survey in April 2022, we saw crazy numbers, right? 51% of smartphone users in Argentina using crypto. Now, these numbers cast a little bit of doubt. Is this true? Can this really be? We realize, a very important point to take into account is the size of this sample. In both of these surveys, we only looked at 100 consumers per country. And in April, this was at the height of Bitcoin pricing, right before kind of the famous crypto crash that we've been tracking over the past 6 months. And so it's quite possible that our sample was skewed in that sense with over enthusiasm for crypto at that precise moment. We redid this survey just recently, just last month in November, with a larger sample size, a truly representative sample size with about 5% margin of error. And so taking into account the wide range of numbers we're seeing, not only from our own research, but from multiple other sources globally, we really need to think about a range. This is such a new and emergent technology. Having a range in mind is probably our safest bet. So here on the right of this slide here, we have our actual survey results, and then what we think that potential range might be considering a typical margin of error in a representative survey. So overall, right now, where our opinion is that 15 to 18%, possibly 20% in some countries, 1 out of 5 digitized consumers or smartphone holders, which again is about 80% of the whole population, has purchased crypto in the past or can be considered a crypto consumer. So that's the number that we're going to kind of be talking about, 15 to 18%, even 15 to 20% in some places. 1 out of 5 as a overly optimistic view. That's the number that we feel comfortable with right now. Okay, so going ahead, I'm going to turn it over to Nacho in a moment to go into what these crypto consumers look like. But just before we do that, that percentage that I mentioned, 15 to 18% works out to more or less 37 to 52, somewhere in there, million crypto consumers in Latin America. And what's interesting is that this number continues to grow despite this crypto winter that we've all been experiencing since April. And we have several announcements in the region to support that. Bitso reaching 6 million users in October, continuing to grow just from 5 million users not very long ago. Launches from Nubank and Mercado Pago around crypto, which have been very successful. The increasing interest of international exchanges and their commitment to Latin America, and particularly in Argentina and Brazil. So we have clues from the industry that despite this crypto crash, interest and usage of crypto in Latin America continues to grow. And so to understand that a bit more, I'm going to ask Nacho now to come on screen and tell us specifically about the usage of crypto consumers in particular.
Well, thank you, Lindsay. And exactly as you stated, even during this crypto winter, the crypto phenomenon continues to grow in terms of innovation and companies entering into the market. But even though we are certain that 2 out of every 10 Latin Americans have purchased cryptocurrencies, in some countries that can be 3.5, in another ones can be a little bit less, we have no concrete information on these customers. That's why we conducted a proprietary survey of adult smartphone holders who has bought crypto. This means that we pulled more than 1,800 cryptocurrency users to better understand some key questions about their crypto financial profiles. And here are some of our key findings. Next slide, please. So, there we go. So first and foremost, a commonly heard message about cryptocurrency usage is something like this. Yes, okay, a lot of people are getting into crypto, but they aren't doing transactions. So they are only purchasing once. Well, that's not true, and we have data for this message. According to our surveys, 2/3 of crypto consumers in Latin America qualify as an active user, or in other words, only 28% claim to have purchased once, twice, only for testing. 4 out of 10 crypto consumers, and that's more or less 14 million people, purchase crypto at least once per month. So of course there are, and we found a lot of differences between each country. Chile, for example, has a lower purchasing frequency, and Brazil the highest share of only testing buyers. But all of this information provide us and you with insight into the unique characteristics of each country and raise deeper and more pertinent questions for future research. For now, we would like only to concentrate on key message. So if we go to the next slide, please. Another common misconception, now we know that this is a misconception, is that crypto is mostly informal and is used for illegal transactions. So only a small portion of those monetary flow can be profitable for a company. Again, false. We ask where this crypto user purchased their crypto, and what we discover is that most crypto consumers access crypto by purchasing directly from a centralized exchange and using a typical digital payment methods. So 8 out of 10 crypto buyers purchase on an exchange, and as you can see, they pay primarily with cards, digital wallets, and bank transfers. Just to give you an idea, Chainalysis report that Latin Americans receive 500 billion in crypto from 2021 to 2022. And of course, this raises a lot of new and better questions than before. For example, how to capture these crypto cash ins and cash outs. And we'll have to take into account a lot of specific considerations, and there is still much to be done in terms of, for example, qualifying crypto exchanges as a legitimate merchant, enable strong identity fraud control. There is still limited on-ramps for the unbanked, and other questions that now we can confirm that are part of this 80% of buyers. If we go to the next slide, on the other hand, what we found is that 2 out of 10 circumvent the financial system through P2P transactions. For those who are unfamiliar with this procedure, it means that 2 people are contacting each other in order to directly transfer crypto and fiat money between them. This 21% is part of those crypto flows that A, are unlikely to be declared as a crypto transaction, and B, and as a result of that, probably are avoiding any possible taxation. But as I say, unlikely and probably is because another interesting finding of this report was that only 8% of these P2P transactions are done in cash. So the rest, that 13% that you see there in the screen, is done via bank transfer. So even if no one knows why the money is going out or in, it leaves a track in the financial system. Further to that, while some of these transactions might have been arranged in forums or not well-known web pages, it is most likely that some of them have been originated within a large exchange. For example, Binance. That's what you are watching there in the right part of the screen. So next slide. Another very common message, and this is a question that we have done in all our surveys. We show to you our proprietary surveys, but we have done much more surveys for clients. So, and this question, we have done it at any survey. The common message is crypto is only used for financial speculation. Well, we have asked this question a lot of times, and what we discover is that this message is not entirely accurate. Why? Well, because yes, crypto is mainly used for investing purpose. But when posing a multiple choice question, investing, even when it is the primary use case in all economies, you can also see how other use cases such as accessing to stable coins or digital dollars, protecting against inflation, money movements or rewards, and even paying with cryptocurrencies are already very real use cases. In fact, what you are watching in this graph is that these use cases are more relevant among more major crypto buyers, the frequent cryptocurrency purchasers. So again, the numbers change by economy. Argentina, for example, emphasized, among other things, inflation, protection, and access to a stablecoin. However, the message here is, yes, there are real use cases, and their prevalence will grow as the crypto consumer matures and become more frequent. If we go to the next slide, we found that 11% of our respondents in this crypto usage survey, 11% spend their crypto. And we have seen the boom of crypto cards during this year. In our survey, we found that cards are the main enabler for real-world commerce. 4 out of 10 of those that spend their crypto are using a debit card linked to a crypto account. And the most relevant use case is retail at a physical or at an online store. So yes, crypto cards are accelerating the commerce, and they are also helping crypto users to use and spend their crypto. Next slide, please. In addition to this, as you might be aware, NFTs and the metaverse were huge trending topics during this year. So we attempted to better understand how crypto users interact with this new manifestation of crypto assets. And this is also another huge finding. Recall that the crypto winter began on April or May with the Terra Luna crash. We will speak a little bit about that. By the end of this year, the value of some NFTs marketplace falls by 99%. However, according to our surveys, 23% of cryptocurrency buyers reported purchasing an NFT, and 3 out of 10 are inside of some metaverse platform. All right. So this is a huge and very interesting finding that, as I was saying, raises new and better questions. Finally, if we go to the next slide, we also discovered that cryptocurrencies are reshaping the payout industry in the digital economy. 43% of Latin crypto consumers, in particular, receive cryptocurrencies as a reward in an online gaming or a gambling platform. So, to summarize, these are some of the most important findings from our research. And of course, you will find much more information about each country specific in our white paper. But some of you might be thinking, all right, Nacho, great insights, but we are currently in the middle of a massive crypto crisis. So of course, we wanted to take at least 2 minutes to discuss the current situation. If we go to the next slide, please. That's true. As previously stated, we have entered in a new bear market since April, May. And that was a result of different external factors, such as the Russia-Ukraine war, the monetary response of major economies rising the interest rates, the global liquidity crisis, and so on. However, Due to internal factors of the crypto ecosystem, this crisis is much more visible in crypto. Factors such as poor product design, lacks accountability, and frauds and fraudulent schemes are completely exaggerated here in crypto. So a couple of thoughts about that and trying to look into the future and 2023. First, the crypto phenomenon has always shifted in cycles. Bull markets and bear markets, hype and run cycles. Across all cycles, the message of bubbles and the end of cryptocurrencies became mainstream, always. That's what we know from the past. But what we have learned from the past, however, is that A, crypto is anti-fragile and has demonstrated a great resilience, and particularly Bitcoin, even with this volatility of the price. But most important, with any cycle, the scenario changed. We got learnings and some trends accelerated and others shift and new ones show up. So these are 4 trends that we believe will influence and shape the following cycle. First, and in the short term, we will see increased transparency from centralized crypto exchanges. In fact, we already see many examples of this. With those of you which are part of our newsletter, I dedicated an article speaking about this and was published yesterday or the day before. But what we are seeing is most exchanges adding proof of reserve, proof of liquidity, or proof of solvency systems in their platform. So we will see an increased transparency in that part of the crypto ecosystem. Secondly, we believe that this crisis, and because it is specifically in the centralized exchanges with the crisis of FTX, well, now BlockFi, etc., this will increase the demand for crypto services from regulated institutions. So this means that traditional financial institutions and neobanks with crypto schemes such as PayPal, Nubank, Mercado Pago, Voila, and others, they will probably benefit from this crypto crisis. Just remember this number: 51% of the crypto adoption in Latin America happened after the pandemic. So this is the first bear market from a huge part of this population, and they will probably prefer or shift for more regulated institutions, at least in the short, middle term. Thirdly, more regulations. This is a trend that has accelerated dramatically during this year and will shape the entire year of 2023. During this bear market, we have seen United States, the European Union, and many other major economies that are starting to take this issue seriously. Just to mention, this week, Brazil finally passed a law that was partially approved by the Congress since April, 7 months ago. So, of course, we know that all the regulations take time to implement, and in some cases, they will not be fully implemented until 2024. But for sure, this is a clear trend that has accelerated during this bear market and will shape the future cycle. And finally, those of you that are inside of the crypto ecosystem, you know very well that decentralization has long been a source of controversy within the crypto revolution. As the saying goes, not your keys, not your coins. However, moving your money through decentralized exchange and protocols or using self-custodial crypto wallets has proven not to be viable for everyone. It remains far more complicated and sophisticated, and the UX is still not good enough. But at any case, it is reasonable to think or believe that this current crisis will hasten this trend in some sectors of the industry. It will also be accelerated, but we believe over a longer period of time. So that are our news about crypto usage and some trends that we believe that you need to be looking forward in 2023. And we go back to you, Lindsay.
Excellent. Thank you, Nacho. And I see lots of questions coming in. We're going to address them all in just a few moments. So don't be shy. Make sure to get your questions in there. In just a couple minutes, we're going to be opening it up fully to our Q&A. So Nacho, thank you very much for that summary. Again, a lot more details available in the report, which we'll be sharing the link for in just a moment. Now, to tie this together, because the intention is not to think about fiat currency and crypto or digital payments and crypto, but to really consider crypto as yet another complexity of what we call digital payments in general. Prior to the pandemic and prior to this great shift we've seen, it's really been cash cards, right? Do I pay with cash? Do I pay with cards? Now, consumers are having to think about cash, cards, bank transfer, digital wallet, and others, and they have to negotiate, am I going to pay with fiat currency? Am I going to pay with crypto? And which crypto asset am I going to use? And how do I optimize my financial life with all of these options available to me now? So increasingly, competitors in the payments industry need to be thinking about the niche product market match, the product use case match that is going to provide the best user experience for that particular operation the consumer is trying to do. And right now, what I feel is that we're in this massive experimentational period. And in the next several months and years, the industry will be parsing out the best product match for the best use case. And so companies need to continuously think about optimizing, not for a consumer type or big swaths of transactions, but very specific transaction types. And so that's, I think, the main big competitive challenge facing companies going forward. And to kind of close out this conversation, bringing crypto and digital payments all under one umbrella, a couple of predictions that we foresee happening over the next year. As I mentioned, e-commerce is already at 16% of retail payments. And that's making a big impact on the mix of payment methods overall. Now, we project that digital payments are growing 20% annually. Okay, so with that, $1.4 trillion of opportunity, digital payments are going to be growing 20%, with cash growing at a much slower rate, because cash can only be used in in-store retail and e-commerce, representing about 10% of overall e-commerce. So that already is a huge imbalance. And so with e-commerce growing 25% and in-store retail growing 5%, we can see that e-commerce is going to disproportionately impact the payment method mix. And if digital payments overall are growing 20% annually and in-store retail growing only 5% annually, we're going to see this balance continue to become increasingly in favor of digital payments, with cash continuing to decline. Now, I don't believe that cash is going to fully disappear. As I said, consumers are going to be looking for the best experience for each individual transaction, and cash will continue to be the optimal experience for a certain set of consumers for certain use cases. But that is certainly going to decline. And so we continue to anticipate aggressive and very positive growth of this industry. An important question that we get all the time: what is the future of PIX? What is the future of instant transfers, money transfers? And is there a ceiling to this growth? We believe, based on conversations with banks, with merchants, looking at other global markets, we believe today instant transfers are representing, as we said, about 18% of e-commerce. Other digital overall is representing 20% of the total pie. When we look at just e-commerce and the impressive trajectory of PIX, we believe PIX alone could represent 30 to 40% of e-commerce in the next 3 years. Already, certain merchants are reporting that PIX is already representing over 50% of their total volume. So instant transfers will continue to grow and could represent around 40% of e-commerce, okay? But this will hit a plateau when value-added services will be needed. What is underappreciated about the card industry is that over the past 4 decades, card networks have built in impressive levels of security and value-added services for merchants and banks. And these services have not yet been built around instant transfers. And as they continue to gain scale and accelerate, instant transfer value-added services will be required, such as specialized fraud protection, enabling reversals or reversal insurance for an irrevocable transaction, financing and credit capabilities with instant transfers. These are already in the works, but they haven't been enabled on a large scale. And when they are, this will inevitably add cost to bank transfers, which in most cases today are enabled for free. And so our opinion is that, this heyday of free bank transfers is being extremely disruptive right now, but will begin to hit a plateau, and there will be added cost added on to that, making it more competitive, making cards and instant transfers on a more even playing field when it comes to cost. So this is a prediction that we anticipate to happen over the next 24 to 36 months. Okay. Crypto purchases. Nacho talked about how about 11% of crypto consumers are making purchases with their crypto. Now, through a series of assumptions, which are available in the report, we think that crypto purchases could reach, might be around $100 million right now. No one is tracking this information and no one has a real, very confident number. We think it could be around 100 million. It could grow. We know that it's growing quickly. It could grow to 600 million in the next 3 years. And while that is very impressive growth, it's small. It's very small compared to the massive pie of over $1 trillion in fiat-based currency overall. So I want to put that in perspective. We talk about how exciting crypto is, and undeniably it is. Yet we need to keep it in perspective with other opportunities out there. And more importantly is the importance and weight of cryptocurrency money movement, which is already over 500 billion according to Chainalysis. So just putting that in some context, what we expect with the volatility of Bitcoin, with the recent crypto crisis that Nacho was speaking about in Latin America in particular, the industry is going to increasingly move towards stablecoin adoption, digital dollars, and in many cases, the consumer not even knowing if their transaction is backed by blockchain or not, because the digital dollar being really what they value is what's going to be marketed and what's going to be really sold to the consumer. And finally, we still have a financial inclusion gap in Latin America. Okay, and by that, representing, what the cash volume in Latin America is still over $500 billion, and cash is not used only by people who don't have access to banking. Of course, it's still used for many reasons by people who do have a credit or debit card or other digital account. But there is still a large gap in merchant acceptance of digital payments and consumer usage of digital payments in certain markets, most of which we did not cover in this top 6 market analysis. And so what we see is that what is really moving the dial, really moving the needle in terms of encouraging and underbanked people to participate is a zero-cost model based on P2P payments, based on bank transfers, based on QR code. That's what's moving the needle right now. And so those low-cost business models is what's going to move us forward to continuing to capture this $500 billion. The card industry is working on and needs to continue working on reducing costs or coming up with some other way to monetize their network other than charging merchants, because we're a bit at a block where this has a bit of a ceiling. Now, once you bring folks into the digital ecosystem and they understand the value of it, then they become more tolerant of fees. But to break that barrier, we need to come to terms with the fact that we need a lower cost model to fully exploit and take advantage of the cash spend that's still out there. So that's a challenge for all of us to be thinking about solving. Okay, so that is just a few of our insights and what we expect to take place over the next year and beyond. We'd love to hear your reactions to this if you have questions or comments to this thinking, and we're going to continue to look at this in our next webinars, our coffee chats, and into 2023. All right, so let's move ahead. I want to remind you, everyone, that this data we're going to circulate both this deck and the webinar recording in the next couple of days, but already right now you can download the report using this QR code. We're also going to share the link here in the chat so you can download it directly. We have, all of the data there, as well as a full written narrative, so you can really understand how we're thinking about and understanding these trends that we've been speaking about. Okay. All right, so let's go right into our Q&A. We have several questions from the audience here, and we're gonna kind of go back and forth from crypto to other digital payments. But I want to start, Nacho, going back to this. A lot of questions here are referring to the bankruptcy of FTX, and you spoke about it briefly, but can you elaborate? What do you expect to happen? Could it be in Latin America that clients continue to panic, withdraw their money from Binance and other exchanges, aggravating the crisis? Do you expect this to continue to happen in Latin America?
Well, that's a great question, and for sure, no one knows. And as I always say, if anyone comes to you and speak with certainty about crypto future, just don't believe him or her. But what are we seeing? We're seeing a huge concentration in Binance as a main exchange. It was by far the principal exchange, but now after FTX, after BlockFi last week, and we certainly doesn't know if any other exchange will probably enter into bankruptcy and brings a biggest concentration on Binance. And that's always a risk. We all know that in crypto, no one, and we will speak about this next Monday in our crypto coffee chat, all what we know from the short crypto history is that no one is too big to fall. So for sure, this is a trust crisis apart from an economical crisis. But on the other hand, as I try to state with these four mega trends, what we see is that the crypto ecosystem is not only a thing of crypto native exchange so far. So we have regulated institutions, neobanks mainly, which are entering, we are offering crypto services in closed loop models, which are very, very, very regulated. And that's why we believe that a part of the demand that still believe in crypto for the long run, as we do, and as we have evidence from the last cycles, and we will speak about this also in the next Monday, we believe that these institutions will have benefits from this crypto crisis. It's too early to know if we won't see or we will see more replicates of in other and different exchanges. We believe not. Binance has also created this massive fund for helping all the projects that needs liquidity, but it's too early to know. So we can wait a couple of weeks at the end of the year and January to see how deep are these replications of the FTX crisis. But in Latin America, what we are watching this transparency from the local exchanges. We are seeing that they are showing this proof of solvency schemes inside of their platforms. And as I stated, we are also watching some acceleration of the regulation. Brazil, 3 days ago, they accelerated this debate because of this crisis. So on the future and on 2023, we will probably have more boundaries inside of this ecosystem, and that will bring the next cycle and a much more organic growth of this phenomenon.
Nacho, that's thank you. That's very interesting. And you mentioned regulation quite a bit, and that's going. I have two questions about that. One is a question that I have, and another question is from the audience. So, can you speak to the recent Brazil enactment of crypto law just this week? And does increased regulation have risks for user experience? We kind of assume that it will help instill confidence and security and legitimacy, but could it also deter usage by making it too complicated or too difficult?
Yes, well, about the Brazilian law that was firstly approved on April for in the half of the Congress and was approved 2 days ago. What we need to know is that now it must be approved by the executive, and Brazil is in this transition from Bolsonaro to Lula, so we can expect it's very unprobable that it will be approved during the Bolsonaro's months is still in the government. That can happen, but it will be debated for sure in 2023. What does it says? Well, it brings more and it puts the consumer protection into the scene. It creates a license for crypto companies, and it's also, of course, try to accommodate these differences that we see from local and international exchanges in the biggest economy of Latin America. So another important thing, speaking about of regulation, as I said, is that the United States and the European Union, they both are accelerating the debate. Why is this so important? In my opinion, it's one of the most relevant trends that we must be watching very close. Well, because what we know from the economic history is that the lower middle income economies, when they doesn't know very well what to do, they look into these Occidental economic hubs and they just copy paste the regulation. So once we see the MiCA and the regulation in the States, we'll probably also see an acceleration in Latin American economies that haven't yet debated a regulation. Remember that we have El Salvador. Remember that we have Colombia with the regulatory sandbox. Remember that we have central bank digital banks in Central America. Remember that we have some specific normative in a lot of different countries, like in Argentina. We have hubs inside of the regulations. But when these huge economies take a position, the history showed us that a huge part of the world copy and paste.
Exactly. It still looks very experimental, right? It's still trying to figure out what's the best way to approach this. So everyone's learning at the same time. So Absolutely. Thank you, Nacho. We have about 2 minutes left. I'm going to answer kind of one question that addresses many questions from the chat. And this question from Priscilla: can you give more context on money transfer becoming the new cash? What are the trends you're seeing on the volume growth? Great question. And there's a few other questions, beyond PIX, are there other successful examples of this? Have we seen cross-border instant payments taking place? And so Priscilla, to your question, there's a lot of anecdotal evidence that PIX is really cannibalizing cash. First off, we do not see credit and debit card volume in Brazil declining. But we do see PIX skyrocketing. And actually, one of my analysts just texted, to mention that PIX had its record day number of transactions ever this week. But we don't see credit and debit card volume declining. So that tells us that it is cannibalizing cash payments. First of all, it has cannibalized TEDs and DOCs and other bank transfers. And secondly, cash payments. And when we talk to folks on the ground, unanimously, oh, cash isn't used anymore. Oh, my nanny or my gardener or my cleaning lady now uses PIX. Previously unbanked people will even say, no, I don't have a bank account, but I have PIX. So you can see that there's a bit of a education that still needs to take place, but even people who are not familiar or comfortable with the financial system are using PIX and starting to use this over cash. So these are kind of anecdotal examples, but in other markets, we also see this occurring with platforms like Yape in Peru, with platforms like Nequi in Colombia, wallet bank-owned P2P platforms that are successfully moving into merchant payments. Yape in Panama, Sinpe Móvil, similar central bank owned infrastructure in Costa Rica. So there are many other successful examples, none at the scale or impact of PIX, but we do see this starting to really make an impact in these markets. And we're going to be, Brazil is certainly the leader, and it's spurring interest in other markets, including Colombia, for example. Colombian regulators coming out and directly saying, we want to bring PIX to Colombia, and the Brazilian central bank saying, we've created this resource where you can take our model and copy paste it, as Nacho said, into your own market. So absolutely, we're going to see this continuing to spread across the region. And quickly to the question about, is this happening at the cross-border level yet? Not in any massive way. There are lots of pilots out there, lots of experiments. We have many fintechs starting to really focus on enabling cross-border remittances, specifically in Central America. We have Cash being one of the first fintechs to enable cross-border remittances within the region. We have PaySend just recently launching with MasterCard, enabling a new way to send money in and out of the region. PIX launching international PIX. So this is still in early stages, but we're definitely going to see that ramp up and accelerate, and making cross-border international money movement much more top of mind and user-friendly, cheaper and accessible in the next year. Okay. So we're just about 1 minute over. There's a lot more questions here. We're going to try to answer them via email because some of them are very interesting. We really want to engage with you guys. So, but we do have to wrap up. So before you all go, I want to thank you sincerely for participating today. And we're going to quickly take a quick poll here on how you would like to participate or connect with PCMI in the future. Just to remind you, we have two top ways that we engage with clients. Through customized strategy work, you can see the list of potential engagements that we commonly do with clients, as well as thought leadership and education. So we would love to hear from you. If you have an urgent need you need to take care of before the end of the year, if you just simply like some more information over email, if you'd like to have a specific conversation with myself or Nacho about any of the topics that you learned today, if you'd like to introduce us to your global colleagues who are overseeing LATAM regions, we'd love to get in touch with you and help you and learn from you, whatever makes sense. So go ahead, and if you could please take a moment to answer that poll before we all sign off for the day, that would be terrific. And as a reminder, everyone who participated today will be receiving a copy of the recording, a copy of the webinar deck, and of course, you can access our white paper there using the link. So we'll just give it about a few more seconds for everyone to vote, and we'll be in touch with you accordingly following today's presentation. All right, so let's go ahead and wrap. We'll go ahead to the next slide. And just to give you guys a preview of what's to come in 2023, we're continuing full steam ahead with our thought leadership and our engagement with you all with Megatrend's presentation and our 2 coffee chats. We don't have signups available right now. Just wanted to flag these, make sure you're aware to keep looking for information from us and announcements as we make these available. So Nacho, thank you. Great to hear your comments. Thank you everyone so much for participating today. We look forward to talking to you very soon. Have a great rest of your day and a great week.